Welcome to the Nichols Tax Update Podcast, issue number 2129 for July 19th, 2021. Here is our standard disclaimer. No point in reading that again, but I do want to acknowledge the value of my subscription to Tax Notes Today, published by tax analysts. In my opinion, tax analysts is the preeminent source of information for tax professionals, and I rely on Tax Notes Today for the news that I share with you in this program. Let's see what we've got this week. 6 topics, 6 subjects. A bank is required to comply with an IRS levy. There's no option. I'll explain why. Then we have a fact sheet on the monthly payments of child tax credit has been published by the IRS just in time for the July 15th start date. An update on partnerships in the centralized audit regime, which is a surprise for some of the experts who have been proven wrong by the selection of authority that partnerships are going to opt for. Next, a daycare operator's compliance failures are classic examples of income tax avoidance. A mess. Six daycare centers scattered around the Tulsa area, and we'll talk a little bit about how they came to have the difficulty that they have. Speaking of difficulty, the corporate officers of that same daycare center were not treating themselves as employees, but they have to do that. Code section 3401C says so. I'll read it to you. Finally, we've got a tax lawyer in big trouble. A 191-page adverse opinion on his tax shelter marketing operation, which ran into all kinds of, let's just call them headwinds, to be kind, right? All right, here we go. A bank is required to comply with an IRS levy. Marshall Newman is a trustee. He believes the Santander Bank should not be able to collect money from a trust that he's responsible for, but the IRS believes otherwise. And Santander Bank is required under Code Section 6332 to comply with IRS levies when they are received. The bank is absolutely immune from liability for compliance, as long as they comply. Non-compliance can create serious problems for the bank, in that the bank becomes liable then for the amount that they should have withdrawn from the taxpayer's account to pay the Internal Revenue Service. So here's a quote from the court decision in United States versus National Bank of Commerce. A bank served with a notice of levy has 2 and only 2 possible defenses for failure to comply with the demand. 1, that it is not in possession of the property of the taxpayer, or 2, that the property is subject to a prior judicial attachment or execution. And that has been the law that courts have referred to since 1985. That wording is just a good summary of the law that relates to a bank's responsibility with regard to a levy. So if your client gets a notice of levy, you've got a really short period of time to object to that levy, but you cannot expect the bank to delay because they're obligated by statute to honor the levy. Next, a fact sheet on the monthly advances of child tax credit. This little demon over here he represents all of the hyperactive children that we might run into here. The fact sheet on the automatic monthly advance payments of the child tax credit to eligible families, that program began on July 15th. The first checks went out last week. Payments are meant to cover 1/2 the credit families are expected to qualify for when they file their 2021 federal income tax return. Now, that expectation could be based on their tax return for last year. That expectation could be based on their knowledge that they will not have enough income. But if they think they won't have enough income and they get the advance credit, then they do have enough income, then they conceivably have a compliance problem. The fact sheet identifies who will automatically receive advance monthly payments and who still needs to file a return or register to receive them. It provides a 3-step process to help families determine if they qualify for either the credit or the advance payments. File a return or register with the IRS if you want to make sure you're going to receive payments. Finally, the fact sheet tells you how to check the status of your monthly payments if you believe you should be getting them and you are not. Partnerships and the centralized audit regime participation. The Bipartisan Budget Act, the BBA, is the recent legislation that created and focused our attention on the centralized audit regime and forced all partnerships to participate unless they opted out. So all partnerships are participating in the centralized audit regime unless they have opted out. Now what that means is, for most of us, is that the IRS will audit the partnership, and if there's a problem with your tax compliance, the assessment of tax will be against the partnership. The partnership will make the payment and then figure out how to deal with the partners. But we now have 3 years of tax return filings since the BBA, and that shows that most partnerships have opted in. They've opted to stay in to the centralized partnership audit regime. Partnerships that are electing out are generally very small, fewer than 5 partners, typically a family partnership. A benefit to the IRS and to the partners of staying in the audit regime is that there will be a single examination and settled at the partnership level. A downside could be, if you have partners who are not related, when a tax liability is paid for a prior year with one or more different partners. That is certainly a downside risk of remaining in the centralized audit regime and that participation. But for most partnerships, it makes good sense to just stay in and deal with the IRS at the partnership level. Now, we have a daycare operator in tax trouble. Blossom Daycare Centers operated 6 daycare centers around Tulsa, Oklahoma. Notice the citation, TC Memo 2021-87. Keep that number in mind, 2021-87. The tax court here sustained the IRS determinations that the corporation was sloppy with their bookkeeping. They had unreported capital gain, unreported rental income. The IRS disallowed depreciation claimed, disallowed business expense deductions, and came up with over $600,000 in total adjustments before they disallowed the Indian employment tax credit and sustained accuracy-related penalties. Now, one thing that is unfortunate about this is these tax returns were prepared by a CPA firm. The accounting, the regular accounting for the business, was done by another CPA who was under contract. So even though they had CPAs doing the work, it appears that the client simply did not give the CPAs the information, and the CPAs did not ask for it. Something I think you may want to think about that deals with our level of responsibility for the return. I know it's the client's tax return, but do we have some responsibility to apply and exercise due diligence with regard to the reasonableness of the numbers that are going into a tax return? TC Memo 2021-87. Now, TC Memo 2021-86, the same company, Blossom Daycare Centers, Inc., but a different issue. Here, the corporation had not paid its officers wages. Now, mind you, it gave them money, it just didn't treat that as wages. Now, the tax court sustains a failure to deposit and accuracy-related penalties. The couple, who were the only shareholders, the only officers of Blossom Daycare Centers, Inc., were statutory employees for employment tax purposes, and the court sustained the IRS's determination that these individuals performed services for the corporation and received remuneration, big word for received payment for those services. How much? $905,210. Taxes not withheld, subject to or generating penalties here, $347,710. Penalties more than $75,000. Officers are employees of a corporation. Here's what the law says. This is the Internal Revenue Code, Section 3401C. Officer is an employee. For purposes of this chapter, the term employee includes an officer, employee, or elected official of the United States, a state or any political subdivision thereof, or the District of Columbia, or any agency or instrumentality of any one of the foregoing, period. And then this sentence, the term employee also includes an officer of a corporation. Now, I provided the emphasis. I kicked it into red font, and I want to make sure that we all understand that the president of a corporation is an employee and must be paid. And if and when the president is paid, it has to generate a Form W-2. If the officer provides services, clearly provides services for the corporation, there is there is any benefit, any payment, any benefit to that officer that could be denominated in dollars, you've got a employment tax problem. Next, a tax lawyer in big trouble, out the window, holding the sign fraud. You'll notice this is Ernest Ryder and Associates, California operation in the tax shelter business. I left all these citations in here because the court consolidated all of these cases. It was Mr. and Mrs. Ryder personally. It was the law firm. It was an S corporation. It was a couple of other LLCs that were fronting for some of these tax shelter products. So this case consolidates the law firm, the individuals, and a score, literally 20 entities. And you start trying to understand this with a fraudulent failure to file penalty. The court concluded that for at least for 1 year, Mr. Ryder fraudulently did not file because he intended to escape his tax liability. So follow that up with unreported gross receipts from the sale of these tax savings products, add a disallowance of deductions. Finally, the firm's owner and his wife received unreported dividends. Their ranch partnership losses were non-deductible passive losses, and no deduction was allowed for other expenses. It's a 191-page opinion. Millions in taxable income, $5 million in one scheme alone, $4 million in another, a variety of other fronts for hundreds of thousands each in different years. This stuff keeps coming at us, it seems. There's always some new promoter. There's always some new system. But you and me, we need to be cautious. We need to exercise due diligence in determining whether these things that are presented are in fact reasonable. Well, that's it for another week. Thank you for joining me each week. Thank you for your support. Remember, please, to stay safe, and we'll all get through this together.